Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's Tuesday, the 28th of November, and we have Jessica Amir, market strategist at Moomoo, as our guest today, coming out to us from Sydney. Jess, good afternoon.
Hi, Brian.
Now, Jess, before we get your insights, let's take a quick recap of how markets across the region have performed. We're going to start quickly with crypto markets. Bitcoin is around the 37,000 mark. It's at 36,966, down 0.84%. Ethereum is at 2019. It's down 1.57%. Now, looking across the regional stock markets, the Straits Times Index out of Singapore is down 0.38%. And then we have the KLCI over in Malaysia, which is down 0.06%. Shanghai is down 0.02%. The ASX All Ordinaries is up 0.41%. The Nikkei is down 0.11%. The Hang Seng is down 0.76%. Rounding up the numbers, we've got the Kospi, which is up 0.76%. Pretty mixed market today. Jess, tell us why.
A bit of a mixed bag. The bottom line is we've got two things happening at the moment. So you've got the S&P 500 that's been in overbought territory. So the RSIs are looking a little bit toppy. And I guess the investment world is taking profits. That's more or less been reflected across the Asian Pacific today. But then think about the other parts of the market that are rallying and doing well. And it's those oil and gas names that are benefiting. I guess thinking that there could potentially be an outcome on Thursday with OPEC that could lift the oil price. So that's kind of why markets are a mixed bag.
Now, I want to just zoom in a little bit on the oil price expectation. There is a lot of oil inventories which have been piling up. So in the US, for example, they've got over 9 million barrels of oil. They've ramped up production. Is there an expectation that that an OPEC price cut is really in the horizon? Production cut is in the horizon?
Yeah, it's a great question. So I think what you're touching on is really poignant. So we just have to think about the non-OPEC producers that have been pumping out more barrels to the market. And as you said, the US has been pumping out indeed a lot of oil. So they're pumping out about 12 million barrels a day. And we also need to think about the sovereign wealth oil supply that is still at 40-year lows. So although the US is pumping out more barrels, and we've also got other OPEC nations that are pumping out more barrels like Brazil, so other countries of course want to make more money, this will be a consideration. But remember, the outcome on Thursday could go in either direction. Cuts could stay as they are because OPEC is currently cutting. The second scenario is that OPEC not only keeps the cuts but also extends them and pushes them out. And this is probably the baseline scenario that the market is toying with, Brian, and that would essentially put a price floor under the oil price. The oil price at the moment, if you look at it right now as we stand, the reason that it is rallying is because it's been oversold. So the market is thinking this second scenario is the baseline scenario that'll probably play out. The third scenario is probably not going to happen, very, very unlikely. But the third scenario is potentially that there is no agreement made and that every OPEC producing nation would essentially be in a free-for-all pumping out their barrels to the market. That's very unlikely. So the baseline scenario is 2. We see production cuts extend and that would lift the oil price.
Now, US inflation is falling. Is the smart money adding buffers to their portfolio?
Yeah, absolutely. So last week we saw, and continuing to see that this week, we're continuing to see that smart money has been going into those defensive sectors of the market that typically do well when I guess the times get tough. And so this week we've got PCE out, the Fed's preferred inflation gauge, but we also have some data out that is probably going to show that our US consumers are doing it tough. We know jobs growth is slowing, and disposable incomes have been falling. So this is why we're seeing smart money, as you said, Brian, really tilting their portfolios to those sectors of the market, staples, healthcare, that are likely to do well regardless of consumers potentially tightening their purse strings. Also, when we are talk about where funds are flowing, so why is it flowing into staples and healthcare? And indeed, we saw that pivot last week, and we think I think that'll probably continue to play out over the next 6 months or so, particularly with rebalancing taking place. But also the reason for that is we know a lot of the companies in the S&P 500 that reported, they basically said that consumers are making that pivot, spending less on discretionary items and spending more on essentials. And so we think that staples and healthcare are definitely the sectors that are probably going to watch and probably going to rally over the next couple of months.
Okay, Jess, I want to zoom in then on your insights around the healthcare sector itself. Healthcare has been a darling since COVID. So initially it was vaccine-related stocks. What should we be looking out for within the healthcare sector today at the end of 2023?
Great question. I always like to look at the performance and see what stocks have been doing well and why. And that can give you a really good gauge as to where the largest fund flows have been. And so if we just reflect on last week as a great example, we saw that the wearable insulin infusion business, I don't know if you've got any friends or family members that have insulin-dependent diabetes, but there's this new device that Insulet brought out. That's the company behind the wearable insulin device. So PODD is their ticker code. So they actually developed this device, and it's in the process of being rolled out across the globe. And it essentially, says, hey, your insulin is low. You need to, get some food or get some glucose into you. So that stock jumped considerably. And it looks like it's starting to move up off its lows, and it jumped 8% last week. But we also saw, staying in the diabetes space as well, Brian, we also saw the glucose monitoring business called Dexcom. That also saw a sizable rally of about 8%. But why are these stocks doing so well? Well, number one, they're in a technical, just looking like they're going to be moving into a potential technical uptrend. And secondly, thinking about the fundamentals, the market is following quality companies at the moment and pivoting towards quality companies. And both of these stocks are deemed undervalued. And they're probably going to see profit growth, believe it or not, of about 65%. So that's pretty exceptional. 65% profit growth next year is what the market is saying. And then think about that company Absolutely. That we first spoke about, Insulet. Their revenue growth is pretty much untapped in the insulin pump wearable region around the world. So that's pretty exciting.
And those are stocks really I'm going to do a little bit more research of. Jess, thank you very much for your insights, and thanks for coming on the show.
Thank you for having us, Brian.
Now, we've been speaking to Jessica Amir, market strategist at Moomoo, and this has been BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out this interview on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.